Auto gross margin improved sequentially. Cool story, bro. I might have misheard that. I don't remember. I don't really care. Auto gross margins. Yeah, let's talk about AI instead.
What? Hi everyone, JJ here. Welcome. Today I'm going to respond to a video from a Tesla channel, Solving the Money Problem, Stephen Mark Ryan. He's very bullish on Tesla. He says pretty much very positive things. He just parrots Elon Musk all the time. It says nothing critical whatsoever. In this earnings call, he just glossed over the negative stuff and didn't even actually look at the earnings, didn't even look at the numbers. So look at what he actually said and I'll respond to it. Let's get into it.
So Tesla has just reported their Q4 and 2023 full year results. Let's have a look at some quick highlights.
So let's notice here how he picks out the best things. There are some good things, but he just ignores the rest. Anything that he could be critical of that is not such great news, he just ignores completely for the most part.
And wondering when this would happen, finally, Tesla has realized a one-time non-cash tax benefit of $5.9 billion. A trick they had up their sleeve for some time. Tesla's operating cash flow was $13.3 billion. Free cash flow, $4.4 billion.
That's
in Q4
good.
was a $3 billion increase in Tesla's cash and investments, now standing at almost $30 billion.
Yep, that's a positive. They've got a lot of cash. Tesla does have a lot of cash.
Especially given the fact that Tesla, in essence, has no debt and now about $30 billion effectively in the bank. Model Y became the world's best-selling vehicle, which Tesla predicted. Fancy that. They did something they said they were going to do.
That is good. Model Y's become the best-selling vehicle in the world, which is an astonishing feat.
Massive growth in energy deployments, 125% year-over-year growth.
Energy deployment, energy storage is definitely a positive sign for Tesla. It's definitely growing. It's the biggest growth, and he's focusing on that because some of the automotive isn't so good, but he just glosses over that, as we'll see.
And Tesla flexing hard. 1.2 million Model Ys delivered for the full year. Just a few quick highlights regarding vehicle capacity. First,
here it is. He missed the earnings. So this, if you look in the report, I don't know how many people who watch his channel and rely on him for information will actually look at the earnings themselves. But if you look at the summary, here it is. So he was looking at this. And then the next section is the important bit. It's the financial summary, the figures. And people look to him. He's got behind a paywall his projections going out a long way, and some very, very bullish projections. All of these figures he just skipped to. And see, this is the next screen, vehicle capacity. He's going through the capacity of each factory and so forth, but he's missed the actual earnings. Pretty unbelievable that he's going through the earnings, and he actually missed the earnings, the important bit. I wonder how many people who actually watch his channel notice this or even care.
Tesla's market share trailing 12 months by region, US, Canada, Europe and China, continuing to trend higher from fractions of a percent half a decade ago or so, through the 1% barrier, through the 2% barrier, and now, depending on region, approaching 4% in the United States and Canada, and approaching 3% in Europe and China.
So that's good, the market share, but he doesn't mention that it's leveling off. Look at those numbers. We see in Europe, it looks like it's actually going down a little bit there. In China, we've got BYD as a competitor. No, he doesn't really mention BYD very often. Just ignores BYD, which is delivering just as many as Tesla these days, and they do have an inexpensive model. Tesla's aiming to produce an inexpensive model. BYD's already doing this. It's only selling them in China. It's produced a couple of 100,000 of them in the last 7 or 8 months, I believe. And they're not selling them outside China, but looking to do that. I noticed in the earnings call, Elon Musk said that he thinks there should be tariffs on Chinese EVs because they're going to be fierce competitors and obviously looking to expand around the world. So he's just looking at the rosy side of things here.
And who doesn't love a good chart? On screen now, cumulative miles driven with FSD beta. This is what exponential growth looks like. I'm sure it's nothing.
So cumulative miles driven with FSD beta is again kind of peripheral to the earnings. They're not making a lot of revenue out of FSD, and it's not full FSD yet. And so this is the robo-taxi scenario that is in the future, that a lot of Tesla bulls talk about the things that are going to happen. They're not yet proven, and glossing over the actual earnings to date in this case.
And Tesla's cost of goods sold per vehicle. Going back to Q4 2022, call it $39,500. As I record this, Q4 2023, most recent data, just over $36,000. More on cost of good declines on the notes from the earnings call.
And cost of goods sold per vehicle, that's good. It has been going down. That will reach a limit. He mentioned the notes from the earnings call. They talk about that.
Tesla's growth in energy storage deployments, one of the smoothest exponential curves you will ever see. Just look at this. It's a thing of beauty. Musk has long warned investors that the energy business will grow at a much faster rate than the automotive business for many years, and we're seeing this in action. Just look at this. Roughly speaking, in 2018, gigawatt hours deployed, let's just round up to 1. 2023, over 14. Insane.
This is good, this growth in energy storage. It is the growth area, because the rest of it, if we actually looked at the financials, isn't really growing that much anymore. So this is the area that is positive, and Elon Musk has said that it should grow as big or even bigger than autos, and I've kind of been excited about that for a long time, and it's good to see that it is growing and it is one of the strength areas. He does focus on this because of the auto sector has some downsides to it, and that's why the share price has dropped after earnings substantially from the figures that he completely doesn't even look at, doesn't even tell us about.
We've also seen some strong growth in profits from Tesla services and other businesses. For a pretty decent cash burn, losing as much as over $500 million in 2019 to now a profit of about $500 million in 2023.
This really is another positive area, services and other, which is definitely getting better, definitely growing and gaining more profit over time. It is one area where I think Tesla could do very well in the future. If you think of the other services, I know that Elon Musk is definitely serious about this. He can see that it's one of the growth areas.
And now, as always, my favorite charts, every presentation, trailing 12-month metrics, vehicle deliveries, operating cash flow and free cash flow, plus net income and adjusted EBITDA. Vehicle deliveries trending in the right direction, aka up. It's quite evident looking at operating cash flow and free cash flow now. We can see the peak where Tesla's vehicle prices, described by Elon Musk himself as embarrassingly high, were having an outsized impact on Tesla's financials, getting a little bit back toward reality now. And the trend in net income and adjusted EBITDA again, heading in the right direction.
At least he does say that it's coming back to reality. They'd love to see it go higher and higher, of course, but it hasn't. If you look at that graph, it has actually slipped down. The operating cash flow is still very good and net income still very good, but puts such a positive light on everything. Nothing is bad, just pumping it all the time, and nothing is bad. Not one critical word about Tesla or Elon Musk at all. It's confirmation bias, telling people what they want to hear.
Notes from the earnings call. 2023, another record year for Tesla. Surprise, surprise. This will be the same story for at least the next decade, maybe 15 plus years, if not indefinitely. Record vehicle production. Record vehicle deliveries. Around 1.8 million vehicles delivered, which was in line with guidance. Tesla's annualized rate of production in Q4, approximately 2 million per year. Again, Model Y now the world's best-selling vehicle globally. Stunning feat. Huge growth in Tesla's stationary storage business. Again, we heard triple-digit year-over-year growth. And again, Musk pointing out that it will grow faster than the car business. Free cash flow, $4.4 billion in 2023, despite, excuse the typos, record capital expenditure and record R&D expenses. Tesla is currently between two growth waves. The first, ramping with the Model Y. The second will be the next-gen vehicle platform. An extremely big deal with FSD V12 now starting to roll out.
So between two growth waves with the lower cost vehicle coming, but it's not going to be coming till probably the end of 2025, which is quite a gap. Is Tesla's share price going to go down in that time? When we see earnings after earnings, there's pretty much lower growth. Elon said there's going to be lower growth. A couple of years ago, they were saying it's going to be 50% a year growth. A lot of Tesla bulls say that, and then the narrative changed. Growth is not looking good, and here we have one Uber bull and Tesla pumper. It's just ignoring the fact that growth is slowing and revenue next to nothing, which was in those earnings, which we'll look at, but he didn't even mention it.
Regarding the next-gen vehicle, Tesla is very far along, and this vehicle will be profound.
So he doesn't mention the timeline there, which was known in the call, that it's not soon. It's really not soon when we consider that BYD's already got a cheap vehicle out there selling a couple of 100,000 inside China, looking to sell internationally. But from that point of view, BYD way ahead of Tesla in the really affordable vehicle.
Musk also says, quote, "I do see a path, which isn't an easy one, where Tesla could become the most valuable company in the world," which, as I record this, the most valuable companies in the world, give or take, let's call it $3 trillion. That would mean almost a 5x just from where we are today, assuming those other companies don't grow any further, which they will.
So again, parroting what Musk said, he said that over and over. I do see this as possible. It could be the biggest company in the world, but it doesn't mean this could not be a roller coaster, and then it goes through some bad times as well. But Tesla's been through a huge amount of growth. The share price certainly has. It was over 400. It's currently about 55% down from the peak of where it was. So Tesla has to grow this big for people to get a really good return, a exceptional return that a lot of Tesla bulls are talking about, people that have this confirmation bias. If we look at, say, 5x from a small cap company, a good small cap company that could grow 10, 20, 30x, remember all of these great companies, including Tesla, were small ones, but can they grow again? A lot of people think that Tesla's going to grow way more. I've heard even 10, 20, 30, up to 50x from where it was even at the peak, talking about Tesla robots and FSD robotaxis and all the rest of it. A lot of people are sort of pricing this in and expecting this to happen and seeing away there and ignoring anything bad, saying this is going to happen, and Stephen is one of these.
Auto gross margin improved sequentially. Cool story, bro. I might have misheard that. I don't remember. I don't really care. Auto gross margins. Yeah, let's talk about AI instead.
What? That's really telling what he just said there. That was the auto gross margin. He's talking about the margins which have slipped. Elon Musk said he's doing it on purpose to raise volume, but Stephen didn't go into whether volume's raised, whether this has actually worked, which is the crucial point. And he's just glossing over it. He says he doesn't really care. Let's talk about AI instead, and laughs. It's almost like he can't keep a straight face saying it, that he's pumping it, just glossing over the important margin question. Clearly, margins are very important for any company, and especially Tesla in the auto industry where margins are low. The auto industry is notorious for margins to be competed away, and nobody really makes much profit at all. That's been the history. So if that happens to Tesla, it's not a good sign. And I think that's one of the reasons that the stock price has dropped so much, for that very reason that he just laughed about and said he doesn't care. Now, if you're getting value out of this episode so far, I'd really appreciate it if you hit that like button to help the algorithm to spread it to more people, because that's what we want. Thanks.
There's been a few step changes in terms of cost reductions that Tesla's implemented around thermal management, huge cast pieces, etc. But now for them to continue squeezing cost out of their current generation vehicle platforms, they continue to discover they have diminishing returns. Not that they're stopping, it just gets exponentially more difficult to drive cost out, which again, should go without saying. However, this is what the next gen vehicle and the manufacturing system is all about. Another step change.
So this is important. I'm glad he said this, because the cost reductions they have been doing successfully. Elon's talked about driving pennies out of the vehicle. He's talking about even stickers on the inside. Why is that sticker there? Questioning whether they can get rid of things, bringing costs down as much as they can. And they said they're approaching the limit in cost reductions, which is important. And economies of scale and reducing costs that can help with the overall financials. But as he said, they're reaching a limit. You know, the Cybertruck means that costs kind of go up again a bit because it's a new vehicle, a new platform.
Again, energy storage deployments more than doubled, and revenues for energy storage up more than 50%.
That's good. That's a really good revenue growth, but he hasn't mentioned the revenue growth with autos, which we'll have a look at, and it's pretty much zero. Just focus on the good things. Don't tell your viewers, your lucrative audience, about any of the bad things at all.
Regarding Tesla's next generation vehicle, huge bombshell, and I mean huge. Musk starting this comment with, take it with a grain of salt, but our current schedule says that we will start production towards the end of 2025. It's currently 2024. That's next year. Toward the end of next year. That's Tesla's current plan, current schedule.
That's near the beginning of 2024, so the end of 2025. You know, Elon Musk is notorious for not keeping timelines, so we're talking 2 years for this to start. That's quite a long time considering what's happened to the stock price. This is the next big platform where they could sell a lot, but it's 2 years away.
And again, Elon doubles down. It does seem quite likely that we will start production next year.
Quite likely we'll start next year. We know, with FSD and many other things, Cybertruck, we waited a long time, for Cybertruck, and it's just starting now. There's timelines of 2025, which really means the end of 2025, and could be longer than that. So quite a long time to wait, really, and super revolutionary. He's just parroting Elon Musk there and not even questioning everything. If you don't question anything, it's just PR.
There was a question about automotive gross margins. I don't know why. I must have made a typo there. Why would those words appear after that? Tesla's CFO said that Tesla constantly focuses on cost reduction across the board, but it's very difficult to predict cost reductions, obviously. As a result, very difficult to predict gross automotive margins. After all, they do not have a crystal ball. Now, Musk did say this. He thinks that if rates come down, as in interest rates, quickly, margins will be good. If they do not, then margins probably won't be good. And Musk pointing out the obvious, lots of people want to buy their vehicles, but can't afford to buy them. Duh. A reiteration that Tesla is between two major growth waves, and that 2024 volume will be lower
So what he's really saying there is that margins won't improve and they need a lowering of interest rates for that to happen. And will that happen? We don't know. People are trying to predict that. There's the prediction that interest rates will go lower. May not happen. It really may not happen. Is this showing that Tesla is a cyclical company and the auto industry has been cyclical? So this is a problem, and he glosses over that. But they will be bringing out this lower cost vehicle, which BYD has already done, that will help people afford it. But that's a kind of sticking point with Tesla for the growth. And I think, again, that's why I said this is why I think the share price is going down. People are starting to realize it's going to be at least 2 years for a lower cost model, and they're saying that there's going to be lower growth and people won't be able to afford Teslas. They've kind of saturated the market, kind of reached the level of the amount of people that can afford them, and these prices can come down. And of course, more price cuts means even lower margins.
And a bombshell, when will Optimus first production occur? Check this out. Now, keep in mind, Elon does have an optimism bias. Welcome to the club. But first, Musk emphasizes that Optimus is very new. It's an extremely revolutionary product, and their bot business has the potential to far exceed the value of everything else at Tesla combined. Elon said that there's a good chance of shipping some number of Optimus units next year. What? Shipping, as in to customers. Not building for their own use, to customers. This is batshit insane. I didn't see this coming. Or did I? I'm just kidding. I did see it coming. Shout out to my Tesla valuation model.
So again, we got Elon Musk predictions of when things are going to happen. Shipping, I think it'll be in factories first, single task. It wouldn't surprise me if they set up something in their factory that's sort of non-critical at all and to demonstrate it. A lot of people in that latest demonstration video where the robot was folding washing, that was being operated. You could see in the corner of the frame, just mirroring the movement of the right hand of the robot. And I can see a lot of people just thought that was completely autonomous. It was not. Convincing people about this next phase, when it's going to happen. Remember robo-taxis promising FSD every year for 10 years, so we cannot rely on his predictions of when things are going to happen, and Stephen should say this. I've definitely seen enough of this. He just parrots what Elon Musk says, very optimistic, lots of confirmation bias, but he should have looked at the financials, and we'll take a quick look at those because it's important. This is earnings, and we should look at the earnings. Now, if you don't know yet, I've started the Art of Value Patreon community for just the price of a cup of coffee, providing exclusive videos, ad-free videos, extended videos, talking about the stocks that I own, the stocks that I'm looking at, the stock market, many things. So hopefully I'll see you over there to check it out. I'll put a link in this description for you to do that. So for a start, let's have a look at this. The financial summary, the very first line, revenue. Total revenue grew 3% year on year in Q4 to 25.2 billion. Year on year revenue was impacted by the following items, and it goes through following items. Profitability, our operating income decreased year on year 2.1 billion in Q4, resulting in an 8.2 operating margin. Stephen didn't mention that. Year on year operating income was primarily impacted by the following items, and it goes through. Cash, which Stephen did mention, quarter end cash equivalents and investments increased sequentially by 3 billion to 29.1 billion in Q4. We can see the operational summary there. The total production of different models is 494,000, so that was an increase, 13% increase. Total deliveries 20% up. We look at the solar deployed, which he didn't mention, minus 59%. And storage deployed 30% year on year to 3,202. So good increase there. That's a bright spot. Stephen and the other pumpers don't mention the bad points, the things that aren't working. Just don't even mention it. If you're an investor, a good investor, you'll look at these things, look at the actual numbers of everything. Sure, he looked at them. He just didn't want to tell us about it. So supercharger stations and super connectors up 27 and 29%. So these are positive numbers year by year. So 35% for 2023 for total production, total deliveries 38% up. Solar deployed is down 36%. Storage deployed 125%, which Stephen mentioned is pretty much one of the only of these numbers that he mentioned, the highest number. Supercharger stations and connectors 27 and 29% respectively. Here we see the thing that Stephen completely missed, didn't even show us. As an investor, you should look at it yourself. Don't rely on people like him, pumpers who will just ignore it and say everything's great. Total automotive revenues, year on year, 1%. This is quarter by quarter. And energy generation and storage revenue up 10%. Services and other revenue up 27%. So there are good things here, but 1% for auto revenues. completely did not say it. That's not a good number, and that's one of the reasons that the stock price is down. Total revenues up 3%, operating expenses up 27%, income from operations minus 47%, operating margin 8.2%. Net cash provided by operating activities up 33%, which is pretty good. Capital expenditures up 24%. So for the year, this is important. Total automotive revenues 15% year on year. And energy generation and storage revenue up 54%, which is good. But automotive revenues have definitely dropped off. And services and other revenue 37%, which is pretty strong. That's a good growth there as well. Total revenues 19%, so it's affected total revenues, and total gross profit minus 15%. So Stephen would never say this, never show his audience this. Operating expenses 22%, operating margin 9.2% for the year. You can see from year to year it was minus 0.3, then 6.3, then 12 going up, and 16.8, and it's now gone down to 9.2 for the year. So cash provided by operating activities minus 10%, down to 13,256. Capital expenditures 24%, and free cash flow minus 42%. So all of these figures important to look at because there are some not so great numbers in there, and he just obviously didn't want to say it because I think because of his lucrative audience there. Only tell people what they want to hear. Don't look at the negative numbers or don't tell people about them. Now if you're watching this on YouTube, I'm going to put a link here to a video that YouTube thinks that you in particular should watch next based on your history, so go and see that now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.